referred to you from people that deal with like REOs and deal with the low end, because those are the folks that actually day in and day out work with this type of tenant, and they'll know what the demands are and what how to handle it.
Yeah, just on that point. So, how do you go about getting your tenants? Then are they referred within that same network or within?
Yeah. So again, like some of the markets that we operate in, or all of them, I basically, before we really start buying heavily, I just do a lot of, I call a lot of property management companies and stuff, and we try to locate markets where there's clearly a higher demand than there is supply, which again, it's not hard to find. But if there's more demand than there is supply, it's as simple as actually going to like one of the local like Penny Saver, American Eagle type newspapers and putting an ad there, or like putting out like signs, in front of the house that you already own. Or actually, no, that's not a good idea. No, I mean bandit signs. Bandit signs like everywhere else but your own house. You don't want to advertise it as vacant. But yeah, I mean, if you advertise in those local newspapers and go Section 8, there are a lot of people that find properties, for themselves through that website.
Sorry, inside that same Section 8 housing network?
Yeah. So generally, if people are within that, that they operate, within that price point, like, it's not often that you have like high-end flippers buying Section 8 houses, right? So you have people that kind of specialize in Section 8 housing, lower end stuff. So you have to work with the people that are familiar with, and generally those people will actually have a lot of connections with people that want to rent already, because there's just not enough of this out there. Because to a lot of people, it's a very daunting thing to not only like fix the place up, but then wait like 2 or 3 months before you get like your first check. You have to deal with all the bureaucracy and all this BS and stuff like that. So, but the people that do know how to do it, they generally know people with housing authority, and they actually are very friendly with a lot of the caseworkers and stuff. So they already know that there's a lot of people that within that network that need homes.
Do you hear this a lot? That, I mean, I've heard it too, that a lot of people think that Section 8 housing is actually like you have a multifamily housing that's considered, quote unquote Section 8. But then you hear about, obviously it's like voucher program that carries with the tenant. Does that come across a lot?
What you're talking about is, I forget what year, up until a certain year, you could actually get a apartment complex privately certified for Section 8. So basically, let's say you own a 40-unit apartment, you can actually have them inspect every single unit and the whole complex. And if they certify it, then you don't need individual inspections, and every year they'll send someone through to take a look at random units, whatever. But the apartments that are grandfathered into that actually are grandfathered in, and if you buy that complex and it has that certification, then you can continue operating that, but they don't issue those anymore.
Okay.
So it's gone away. So if you didn't know and then you didn't take advantage of it, then it's gone forever for now. But
yeah, that actually brings up an interesting point. What about things like efficiency units? Is that something that can be Section 8?
I'm not so sure if that can, because it starts with 1 bedrooms, the vouchers.
Right.
So there are no efficiency unit vouchers.
Got it.
Now, we oftentimes in some markets that pay a really good rate, we'll take a 2-bedroom voucher for a 3-bedroom house. That gives an extra incentive to the tenants, because we're getting basically market rents on that 2-bedroom voucher already. So the fact that it has a 3rd bedroom, it's like in Kansas City, the maximum amount for a 2-bedroom voucher was like a little over $700. And people are getting like $650 or $600 market rate. So I'll give a person with a 2-bedroom voucher, that only needs a 2-bedroom house, a 3-bedroom house. I don't care, because the market rate's actually less than that.
One more question for you.
Sure.
When you're penetrating a new market, Are you purely looking at supply and demand to assess what the voucher value would be, or do you actually have intel on what the voucher values would be?
Yeah, no, it's actually posted in like multiple sites, and actually every housing authority has its own website and has not only like a 1-year plan but a 5-year plan. So that's the other reason why I don't think there's going to be any drastic changes to any programs that are in place right now, because there's actually a 5-year plan that's posted publicly by each housing authority that specifically states what they're going to do in the next 5 years, and that would be kind of drastic to change that like midstream. But no, I mean, no, it's not anecdotal type information. It's actually out there. Like there is a rental range for a 2-bedroom, a 3-bedroom, a 4-bedroom, and a 5-bedroom, and that's generally what we'll pay.
So is it really just I guess like a cash flow play then? I mean, or do you get any sort of appreciation?
Right. So that kind of closes the loop, because we're buying these because, like I said earlier, $25,000 house in a not so bad neighborhood. I don't think that's gonna last forever, right? Because you think about it, these houses were selling for 60, 70, 80,000 7, 8 years ago, 10 years ago. So the chances of it coming back up to that price point is not impossible, right? It's still very affordable housing. So our play actually is a little more complex than that, though, because I mentioned that we're actually doing fix and flips in a lot of different areas. We generally fix and flip properties that are also in the lower price points, because we offer FHA housing, or like FHA loan qualified housing. So what that is basically, FHA is also a government subsidized program. It is for first-time homeowners, and it doesn't take much to qualify, and the down payment requirements are as low as like 3%, 3.5%, depending on credit score. And even if you have bad credit, I think it's like 10%. So, I think for us, looking further down the line, let's say we hold these for like 5 to 7 years, and there's redevelopment. We have a couple of different options. We can actually sell our finance back to the people that are in place, but a lot of them are in Section 8. So what we're doing is we have a unique opportunity right now. We have a lot of these homes, and we have a lot of Chinese buyers that are interested in buying them for cash flow, because it actually fits all the check boxes for them. Right now, it's really hard to get money out of China, but you can get $50,000 and below out fairly easily as an individual. So we've been selling homes below $50,000. Like I said, everybody in this room has a big experience with Section 8. They probably heard horror stories, whatever, but, people in China are like, what, Section 8? What's that? Wow, the government pays the rent? Yeah! They're all over it, because, they think like, oh, I'm 6,000 miles away, and, I don't have to worry about rent collection, because the U.S. government pays it, right? So, they love it. So, there's a lot of things about it, and, me being Chinese, I can say this, we love buying real estate, and they love buying U.S. real estate. So, like I said, it matches all of their criteria, and so we have like some unique channels, some marketing groups over there that are selling these properties to investors, and we're actually, we're managing it for them, because we have a longer term plan for all this, because, we're talking about the angle of possibly taking some of these tenants that are already in place. Now, it's not going to be an easy task, but I think there's a way to break the cycle. It's actually why we're also doing this. You have people that are actually dependent on the system. Some are born into it. Some are multi-generational. We actually have 3 generations of Section 8 tenants that, like my partner in Kansas City, his uncle, who owned 100 houses himself, for 30 years, rented to grandma, and then when the daughter was 16, she had a kid, and then she got Section 8 subsidy. And when their kid was like 16, they had a kid, and then so it's multi-generational. And then guess what? When they want a bigger house, they have another baby. That's kind of all they know, because that's what they're born into. They don't see like, wow, there's much more out there, and we can get out of this, because they can't, because the system kind of disincents them to work. But for us, I mean, even if we can affect a small percentage of these folks that are in the program right now, because if you think about it, for us, let's say we're getting like $750, $800 a month in rent. We could actually set aside as little as like $30, $40 a month of their rents and profit a little less from it. and set up some kind of trust account for them for 5 years. And let them know from the very beginning that we're setting this money aside for you. In 5 years, you actually will have enough money for down payment for an FHA loan. Now, what you want to do with that is up to you, right? If you want to buy a house, starting today, you start working towards that. You know, it's not a big loss to us, and it actually, in 5 years, that's enough time for them to actually position themselves to actually be able to take advantage of. Because, you know, they buy a $60,000 house, 30% down payment is like $2,000.
And they're incentivized to stay.
They're incentivized to stay, and they have something to look forward to. That's, I think, hope is the most important thing, because people that are stuck in this situation, maybe not for themselves, but their kids, right? Got 2 kids. I want to do better for them. Shot in the dark, maybe, but you know, I think it might be something that we can do something on.
So I know things have maybe changed. The market's changed a lot since you've started buying such a volume of houses. Are you still finding these deals just on the MLS that you're buying today?
Yeah. I mean, we move from market to market, and again, the window may be closing, but it's still pretty wide open. Let's put it that way. Right? It's still pretty wide open, but we already know, like Kansas City. Today, remember I told you like 2 years ago, on any given day, there's more than 300 just on MLS. I'm not talking about off market. Today, there's probably 100 or less on any given day. Most of it's 2 bedrooms or homes that are pretty much ready to be demoed. And so the houses aren't really available anymore. We still buy there because we have a lot of connections with people that dealt with for a long time. There's still motivated seller marketing still works out there. It's not like here where it's like everybody knows what the value of the house is. They're not going to respond to your flyer that easily, right? You know what the house is worth. But out there, it's like, you know, you never know. You know, there's still people, you send enough flyers, you still get responses. It's a numbers game. So, yeah, I mean, we still get some deals here and there. But, again, you know, there's literally 20 different markets. I did a market study. Because we pitched like multiple hedge funds. We actually got an offer from Fortress over in the East Coast. But we walked away from it because they treated us more like a startup. Because, you know, our entity is relatively new and, you know, partnership's relatively new, but you know, we have a lot of experience. So they gave us a term sheet, they gave us an offer, and, you know, we really struggled with it because, you know, that was a big chunk of money that we could go buy a lot of houses. But, you know, they wanted a lot of upfront money, they wanted a lot of back-end money. It's like after we started making money, they want like 20% of that too, you know, so we're like, I don't think we need to do that. You know, I really don't. So as a company, we decided to just put that on ice right now, and we didn't take their money. And we'll see, you know, as we grow stronger as a company, because remember, we've only been, as a group, maybe a year and a half or so. You know, our balance sheet gets stronger, everything, you know, looks better. You know, we already know that, you know, we were able to get them on board already. So as long as we execute and keep on moving forward and doing well, pretty confident that we'll be able to, you know.
You mentioned that things are getting a little bit more competitive in Kansas City.
Mm-hmm.
What do you think is driving that recovery?
It's actually, again, the news. You know, don't be surprised when I say this, but you know, like them being in a World Series a couple of years in a row, actually they were really in the news. They've had programs that have really been highlighted in the news. Like last year, they did a $1 a house program. Basically, the land bank opened up like 100 houses and sold them for $1 each. But they don't fit our profile because it takes like $30,000 to $40,000 to fix them, because you know they're really, really badly damaged houses. But that got a lot of news, a lot of press, and you know people were like, "What's going on here?" Plus, there's a lot of redevelopment going on already, so it's a combination of a lot of factors. So actually, 2 weeks ago, they reran that program, but they did like $299 houses, something like that. So and they put 50 houses for sale. So they keep getting in the news. People, you know, I can tell you right now, like about a year ago, I was actually at a Meetup event, like in Walnut Creek, and this was not an out-of-state investing meetup group, but it was a little breakfast thing, and there was like maybe 25 people. We went around the circle, and everybody was introducing themselves, and every single person was like, "Oh yeah, I was looking at a property in Kansas City or Indianapolis, and again, this was not an out-of-state investment group. It's just that nobody had options here, so they started looking at all over the place, and inevitably people end up landing in the same spots because these are actually good markets. And so for me, I like to find places that have very strong, stable employment opportunities. You find a place like Memphis or Kansas City where they're logistically well-placed cities. Like Kansas City is right in the middle of the country. They have tons of rail yards, warehousing. Even if the economy is going bad, there's going to be a lot of product going through that area. There's going to be a lot of stuff going on there that is somewhat of course, when the times are really rolling, then it'll be even more. But it's not going to die overnight because same thing with like Memphis. FedEx is out of there, Nike. There's some really big industry giants in there. That and I love logistics. If there's logistics going through that city and there's a lot of freight and a lot of product moving around, then it's generally going to stay pretty stable. And so those are some of the factors that we look at as well.
What have you
Why don't
seen?
this will just be the last question. We've got about 5 minutes.
Oh, that's
so
a
go
lot of
ahead.
pressure.
Sorry.
Make it count. Nick.
What have you seen throughout your experience with Detroit specifically?